to my channel. Today we are going to be looking at posting the final account of the sole trader and also the balance sheet. But before we go into our video, remember to like my video, subscribe to my video and turn on the notification button to get more live updates on my channel. Now, we've been giving particulars to prepare the final account of a sole trader, which is the trading profit and loss account, and also to prepare the balance sheet. This is my ruling. I'm going to be using my vertical ruling for the final account of a sole trader. We already have our heading, ABC and Sons Limited Trading Profit and Loss Account for the year ended 31st/12/23, which is an accounting year. Then we'll start with our opening stock. Mind you, in most of the particulars, opening stock will be written in full, opening stock. But when it is not written in full, you use the date to identify the opening stock. Here we have stock, but these have 1st January 23 and these have 31st December 23, meaning our opening stock is 1st January. So this will give me opening stock 4,000. Then I have my currency sign at the top. I add purchase. My purchase is 12,000. Carriage, if we have carriage inwards, yes, there's carriage inwards, we add carriage inwards. Carriage inwards is 300. Then if we add this together, this 3 will give me 16,300. Then if there's purchases return or return outwards, we subtract. Now we have purchase return 300. Purchase returns is 300. If you subtract in brackets, any figure in brackets in accounting means subtract. This will give me 16,000. So this becomes cost of goods available for sale. Cost of goods available for sale. Now we list our closing stock. So we know how much we sold, cost of goods we sold. Now, my closing stock 31st/12/23 is 1,500. So, if we subtract this from 16,000, it's going to give me 14,500. So, this becomes cost of goods sold. Now, our cost of goods sold is 14,500. Then, we go to our credit side where we have our sales. The amount of sales, according to our particulars, is 100,000. Now, we less sales return or return inwards, depending on the terms that is used. Our sales returns is 400. In brackets, if we subtract, we have 99,600. Now that I've gotten that, we are going to subtract 99,600, subtract 14,500, which will give us 85,100. So this becomes my gross profit. Now, after this, I'll add, this will give me 99,600. So we must ensure that it's the same figure we have on the credit side before closing. If the figure differs, that means your calculation is wrong. Now, this is our trading account. We go to the profit and loss account. Remember, in our profit and loss account, every expenses are recorded in the debit side and every income are recorded in the credit side. Income in terms of discount received, commission received. So first we bring our gross profit from our trading account. So gross profit brought down is 85,100. Now, I'm going to check if I have any. Okay, I have discount received 5,000. So my discount received is 5,000. Now, this is the only income, the only receivable we have under this. So this will give me 90,100. So down to all my expenses. I have rent. I have carriage outwards. Sorry, carriage outwards is an expenses. So my carriage outwards is 300. I have rent. My rent is 600. I have electricity. My electricity is 800. Then okay, that is that. So we'll go to our additional information. We have depreciation was charged on fixed assets as follows. Now the amount of depreciation are expenses. So we are going to calculate the depreciation on our fixed assets and record it under our expenses. So here, say depreciation. Now, the first one is furniture and fittings. So I will use abbreviation because of space. Furniture and fittings is 10%. So 10 over 100 multiplied by 8,000 over 1. 10% of 8,000 is 800. Then the second depreciation, we have plant and machinery, P and M. P and M is 5% on the original cost. 5% multiplied by the original cost of plant and machinery is 9,000. So 5% of 9,000 over 1 will give me 450. Then the third one, we have motor van. Motor van, the depreciation is 10%. So I have 10 over 100 multiplied by original cost of motor van is 12,000. So cost of 10% of 12,000 is 1,200. Now we add all our expenses together. If I'm adding my expenses, I have 300 plus 600 plus 800 plus 800 plus 450 plus 1,200. This gives me a total of 4,150. If I subtract it from this, it will give me my net profit because the credit side is higher than the debit side. So subtract gives us 85,950. Now we have to add this together to be sure we've got that. 0, 5 plus 5 is 10, 0 carry 1, 10 plus 1 11, 9 plus 1 is 10, 0 carry 1, this will give me 9. Making sure that I have the same figure. Now the same closing. This becomes my what? My net profit. Now we close this with a Z line and bring this down, which gives us 90,100. So this brings us to the end of the profit and loss account. So the next one will be balance sheet. So coming down to the balance sheet, this is my ruling for the balance sheet. Now, in the balance sheet, we have to ensure that the credit side and the debit side have the same balance. And then we cross-check to ensure that we are not having excessive expenses. We don't have excessive liabilities over assets. So our assets are recorded on the credit side and our liabilities are recorded on the debit side of the balance sheet. So I'm going to start with my capital, the money we invested into the business. So from here, capital is not given in any particulars, but we have to check through in the additional information. Now we have okay, APC started business with 140,000. So our capital is the amount he started business with. So we have 140,000. Now, after our 140,000, we add our net profit. Our net profit is, we extracted from our profit and loss 85,950, which gives me 85,950. If we add this, this is 0, this is 5, this is 9, this is 5, 12, 2 carry 1, 225,950. Then we less our drawings. Drawings are the amount of goods that were taken away from the company for personal use. Drawings is 40,000. So if we add this, subtract this, we have 225,950 minus 40,000. Now, this gives us a total of 185,950. Then the next thing we have are loans. Now, the long-term loans, we add our long-term loan. Long-term loan was 100,000. So this will give me a total of 0, 5, 9, 5, 8, 280, 5,950. Now this will give me current liabilities. Now current liabilities has to do with those things that affect the profit of that organization. Now, under our current liabilities, we have everything like bills givable, we have short-term loans, we have creditors also. So under here, we have accrued also. Accrued has to do with unpaid. Any amount of money that you've not paid that you are still owing is a liability. So we have accrued rent. Accrued rent amounts to 4,150. Then postpaid is an asset, so it's not a liability. We have short-term loan 5,000. Short-term loans is 5,000. We have creditors. Creditors is 4,000. Okay, these are our current liabilities. If we add these together, once we add, I'll bring my sum here. So I have 4,150 plus 5,000 plus 4,000. This gives me 13,150. Now add this 13,150 to 285,950. This will give me a total of 299,100 under my debit side of the balance sheet. Now, if we come to the credit side, first of all, I have my fixed assets. Fixed assets are those assets in an organization that can easily be converted to cash. That is where you have your plant and machinery, furniture and fittings, motor van and office equipment. So I'm going to get all these four as my fixed assets. We have furniture and fittings, so because of space, I'll use F and F, which stands for furniture and fittings, and the sum is 8,000. We have plant and machinery, P and N, which stands for 9,000. We have motor van, office equipment, is 198,000. Then we have motor van, MV. Motor van is 12,000. So I'm going to add all these. These are my fixed assets. So I have 8,000 plus 9,000 plus 198,000 plus 12,000. That this gives me 227,000 under my fixed assets. Now I'll come into my current assets. My current assets are those things that improves the value of my organization. Now under my current assets, I have postpaid. That is any amount of money that you pay ahead of time. Now I have postpaid electricity. Now, postpaid electricity postpaid is 9,600. Then we have cash at hand. Cash at hand, cash at bank are both current assets. We have 20,000. We have cash at bank 21,500. We have 21,500. Then I also have debtors. Debtors are also fixed assets because when they pay back, they increase the value of the company. So my debtors is 21,000. So if we add all this together, I have 21,000 plus 21,500 plus 20,000 plus 9,600. This will give me a total of 72,100. Now add these two together. So 72,100 plus 227,000 which gives me a total balance of 299,100. Now that brings us to the end of our balance sheet. As you can see that the debit side and the credit side balance, and we have the same figure, 299,100 and 299,100. So don't forget to like my video, subscribe to my channel, and turn on the notification button for more live updates. Thank you.